Good morning, guys. John here, Mr. Forex Fire, and we're just going to head straight into it, and then we'll go over what's happened yesterday, what we're looking at, and just one or two other things I want to talk about as well with regards to yesterday's charts. This is our Excel sheet. Okay, we start this just over 5.5 weeks ago now. We are on a current total. We were averaging around about 2% a day. That'll be just under that now. We didn't take a trade yesterday because the charts or the price action was not showing anything to us, and I'll show the reasons why that was a good decision to do. And we used yesterday as an analytical day to understand and deep dive into price movement as to when the swing points happened. So if you didn't see yesterday's session, it was a good session. We identified points of interest and how we mark them up. From there, overall, we are on the 20th of October. It is Wednesday, I do believe, unless I'm a day ahead of myself. Yeah, Wednesday. From there, we've got a 40.85% growth over these 5.5 weeks, halfway through week 6, obviously. So I'm just going to minimize that. From there, what we have is our chart. So as you can see, we had a big push, right? So from 11:30, over 24 hours ago now, we had a big push. Now, if you watch this, I'm just going to do a couple of things. From there to the start of the session, okay, we can see 8 hours 37, okay. Now, I'm just going to show you some. We were caught in a range here, and it broke out. It come back into the range. It's broke out, and it's more or less come back into the range. However, it's just below this here. It come back into the range here, and then it spiked down. But I'm just going to show you, so if we base it from the high down to that current low, okay? Down to the current low. We've got 21 hours of movement, okay? We've got 8 hours of movement. Now, if you watch this with regards to pip movement, we've got around about 49 pips. You just drop the 49 pips of movement. On this, you've got 39 pips of movement. So on here, you've got 21 hours. So we're coming up to nearly 3 times the amount of time of what this was, and you've got less pips. Okay. So again, being able to identify stuff like that and noticing when the markets aren't moving when you want them to. And again, our directional buys yesterday will just confirm that. I was expecting to head down into these areas, okay, nesting into the 30-minute range pullback and from the 15 minutes, okay. I still think that this is going to hit down to here, then possibly head towards the higher side. But again, today, we still have to be careful because we are still, in my opinion, from that to that high, there's certainly a range that we're in. There's no definitive push out of it. Those will just make that white. Get rid of that. We'll do our path, okay. I do believe that this is going to come down to here, then push up somehow. But we'll do the path because the path is what gives us our higher time frame, if that makes sense, giving us the 1 minute inside of this intermediary price. And a big spike down. Right, so from there, guys, again, these areas, the supply and the demand, and the supply areas, these two areas will hold structure for me at the moment. From there, if we just mark out high, low high. Oh, that's a low, sorry, do apologize. Low, high, just clone that one, low. We do this each and every morning. Just it's more of a visual aid than anything else. We sort of see a bias of direction, if that makes sense. So this here, this swing point here, we never sort of broke structure of this. We did make a bit of a higher high. That's a higher high. Didn't break structure of that. That's where liquidity had resided until we got the push down here. That's a lower high, higher low, sorry. Higher low. Going into, once again, a higher high. And then finally, we broke structure again. So we've got a lower low. Okay, so if we were to set our goalpost first, yeah, 30, yeah, start, and then, as always, we would have 10:30 EM finish. Right, so we've got our goalpost set up. Again, we looking at the structure of play. We haven't got anything definitive. For me, this was the initial drive. This here is still in what we call a distribution phase. We are neither coming down definitively in the trend or obviously not going up. It's more edging towards a slight decline. However, as you can see, as we've come up on this impulse, bearing in mind this was 8 minutes of drive, this has been 20 odd hours, and there was more pippage in the 8 hours movement than what there has been in the 21 hours. Okay, so yesterday was a bit more of an analytical day. Today may be the same. We might not get the move in our session this morning. I'm contemplating on possibly doing a session on an afternoon, obviously for New York, for the US dollar. We may see a movement on that. So as this stands at the moment, we've got a high, low, 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 high, low, 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 high, low, 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 high. We've got liquidity here. Okay. We've then went higher, high as we broke structure. We've come down to test the pullback into here, gone up to a higher high. We broke structure of this. So at the moment, if we drill into where we are, let's just get drilled in. Click on auto. And we'll look at the candles in a moment. Again, we've broken through that structure. Let's take a look. USD must be weak at the moment. Right, so we can see from a structure point, okay, got liquidity residing there. Obviously liquidity here. Like that there. Goes down to here. So 1 to 3. I think we'll risk 1% on this sort of movement because as we've come down, we went into a bit of a level playing field on here. 21 minutes of price action there. Excuse me. So we've got the US. That's the BOS. We've got liquidity. Got liquidity residing there at the moment. As you see, as we've come down, broke structure here. Break a structure. Break a structure. Break a structure. Break a structure. And then a break of structure. So what you've got here, this is as we've come down, okay, this will be as a break of structure. That there. But certainly you've been an order block, okay. Want to see if I can text coordinate style background so we can get that lighter. That's it. And then again, as you've broken the structure, you've come to touch, you've come down. That there would be the order block. We didn't get a retracement to touch, so that would have been a successful trade. As we've come down, we've got an order block here again. This one was successful. See this here? We've come down. A break of structure will come back into retest. So that there, each one of these that I mark up will be classed as a BOS. And if you see the return, you will actively see we've had a touch back into it. Break a structure here, and then obviously there's a order block there, and then there's an order block there as well. We've come down for a break of structure. In fact, we won because a break of structure come here, so I do apologize about that. So I'm just trying to be a little bit visual with this, guys. Again, we'll just move this down to here. I'll pause the video, we'll see what happens, see if we can get this in as a trade, and then we'll take it from there, guys. So I'll pause the video. So that's the directional buy, still stays the same. There's nothing changing from yesterday. It's simply because there's been no movement at all, and we'll just continue from where we were yesterday. I'll be back in a moment. Yeah, so what it is, let's have a look at our fire wand. Gotta get the fire wand out, guys. It's easier for me now. give you a directional bias and things like that. Fire wand. There we are. So going into the session this morning, again, we spoke about how there was more pips in late last night's or late the 2 nights ago move, 40 odd pips in 8 hours, and what there is over the last 24 hours. There's more or less 3 times the amount of pips in them 8 hours than what there has been in the last 21 hours. So that says a lot on price movement at the moment. However, coming into the session this morning, we've got this little bit of a push coming down. Okay, so from this high down to here, there's been a 35 pip movement. So we've just seen, in my opinion, in those 2 hours, there's been more or just about the same amount of pips movement in those 2 hours, where 21 hours ago, from 21 hours till now, in those 21 hours, there's only been around about I think it was 39 pips or so, a daft like that. However, as we've come down in this swing trend, we can identify breaker structures on each one, and each breaker structure there's only been 2 that's come in as an entry, and there's been a 1 to 4 and a 2.7. Now we've come down and created a big push here, consolidation, and then another drive. I'm anticipating a push back up at the moment to the order block area of that there. Okay, and again, when we speak about order blocks, we went over this quite a bit yesterday, and we delved in like a deep dive session sort of thing. We cushion just before the order block and cushion just above, obviously allowing for spread and things like that. We anticipate price to sort of come back up into the field of play. I think that's going to be a little bit better to show you. And now we're going to deep dive into the price action on this to see what footprints this high here, okay, to see what this high here has done to this low. Okay, so I'm just going to identify this as high and low. Okay, the directional move at the moment is that. So that's the swing point we're concentrating on, and as we delve deeper in, okay, because again, I want to be very analytical with these things, just so you can understand structure of inside of a swing point, because the range, because all you're working in on that 1 minute is the range, and you're waiting for the pullback within the range after a previous breaker structure, if that makes sense. So with that in mind, we can work from where the breaker structure was down to that there. That there, guys, is in balance. Okay, so price will want to mitigate possibly at some stage. So we've got imbalance there. Okay, and as we come down, there's been some good price action, price efficiency. So from that wick to that wick, crosshair to the right, you can see the wicks come back into touch. From there, selling to the touch of here. And if we move across, all price efficiency has now been met. All price efficiency has been met within that wicked area. Selling power, come back in to the wick here, and that would be your imbalance there. And then it continued down, a little bit of a mitigation. We've come down, we've now pulled in and pulled right the way through the whole of this area. Okay, so now that invalidates that area of imbalance. And I'm hoping, obviously, when I do these things, I sort of analyze everything a little bit deeper. You are taking notes, because this will help you when you're working within your swing point. You'll be able to see the footprint that is within that, to be able to identify these areas as well. And from there, that leaves two areas of play, to be fair. We've only got the footprint of imbalance here, and then we've also got the order block here. Again, wick to wick. We've got imbalance just above, and I've just noticed. So there's 3 areas that we can contemplate. Imbalance. I'll just make that a little lighter. So we've got 3 areas. That imbalance on them in the middle certainly looks tasty because it's right on the entry level of what we're treating on the cushion of our order block. So again, we'll wait and see what happens within that. We can see within the price action on that, okay, where this was here, where from here down to here was imbalance. We've mitigated it fully. It's now broke out. It's respected it as such. What we need to wait for now is something along the lines, as we've come up to mitigate through, we've come back into 50% of it. Hopefully we're now going to be seeing a surge on the upside because there's nothing left on a footprint from here to here. So the next anticipated area will be that there, to then come down to mitigate into 50% of that pullback. Okay, if we get the 50% pullback, 50% of the mitigation of that pullback there, we may get that drive and then a drive down. But we'll pause the video, we'll see what happens, see if that's the width. Well, that's my analytical bias approach within that swing point. Again, you can have a directional bias on a longer, higher time frame, but you can also practice looking at these, identifying structure points within the swing that you're working in to get your entry in your TP, if that makes sense. And it's all about just becoming one with the chart, to be fair, identifying, and don't let the 1 minute chart scare you. Price will always respect these areas all the time. Doesn't matter whether it's a 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, or even the monthly. Price will always come and respect these areas because time's just fractal. Price is the same on every single time frame. It's just you've got a more refined approach when you're coming down into the lower time frames, and a bit more, like, not so much fast paced, but a bit more sort of fluid movement, if that makes sense. And after all, the candles tell you a story. It's how you read that story to determine the outcome of your area. Now you can see, I did say we get a mitigation up into here. We got that. We've certainly got that. The next run of play is certainly to come down into what I would say is that range of 50%. Okay, let's see if we get, let's see if we actually get that. And then for the move further up, if I just sort of get this color. That's the path. That's the one I want. Make it white. I just want to see whether we get the push up. So again, I suppose what I'm looking at in essence is the A, B, and then C maneuver. That's the sort of thing I'm looking for. We've had it to there. I'm expecting a push down to here somewhere, and then possibly if we beat this high, it's either going to test off this and then drive down from this level, if that makes sense. We might get a bit, we might start getting a run of play of liquidity there, if that makes sense. Possibly, but it would just depend. It would just depend on the drive. Okay, there we are. That's what I meant to say. We might get a push on liquidity, but I'm just going to get rid of some of the noise. Get rid of that ABC. And you can see here, we've now come down and touched more or less 50% of this range. Okay, that pullback there. Beautiful. Now let's just say we do anticipate the move to the higher side, or we might even break down to the lower side here because we haven't looked at what the footprints are on here. In all honesty, there's not really any price inefficiency on the lower side. So as this is a returning flag up into here, we can see there's no imbalance as such up on this area here. So hopefully we will get another bounce from the pullback of this, and then we'll go to the higher side for entry. Just going to pause the video, but this is playing out beautifully as we go a bit more deep dive analytical wise. I enjoy doing these because it sharpens my senses, it sharpens my eyes as well. And we'll just see where price leads us within this initial impulse drive as we understand why price is moving the way it is. Okay, so I hope you're enjoying this session so far. And there we have it, guys. Again, beautifully given on a bias. We mentioned on this range, we didn't have any sort of price inefficiency. We identified our imbalance areas just above us. So there was nothing really here on the downside to hurt this obviously hurt people on the buying side. There's more up on the top of here, if that makes sense, for to stop out to sort of give the market movers or the market makers more money in what they're trading, because we only hold liquidity on this bottom side. So this is why I'm anticipating this order block on the top to touch to come in. However, we said on the way back up on here, there was no price inefficiency. There was imbalance here. It pulled out, it come back in, leaving no footprints for us. As it come out, it pulled back in, mitigating into the area as well beautifully, even though it broke straight through. From there, this left a pullback within that. So I anticipated a touch into the imbalance area on the higher side to come back in to the 50% of this impulse move. Okay, so as it's done that, okay, you can see if you were going on an order block move, if you were going on let's say a breakout, and this is where you start getting very analytical. Okay, so as you've had a breakout, okay, from the structure, you've come back in to retest it beautifully, and then it's gone on, and it's not only gone on, it's actually starting to mitigate and respect into the imbalance area up here. So what we've got from there, guys, is again 50%. This is around about 50% area to the eye, or maybe a bit more. I mentioned that this would be possibly happening after we had the pullback. The pullback has happened after that there. That was where the pullback came in. I said as well that I would possibly anticipate liquidity forming on the top of here just after it done that, and it's certainly doing that at the moment liquidity wise. We've got a 1, 2, 3, 4 candle formation at the moment. So at the moment we've got liquidity resides right there. What we want to see is a drive through, and if we get a drive through this here, okay, you've then got the second range, if that makes sense, of that there. A second range here, but we need this to break out. If it was to break out from this structure here, let's get rid of that. If we were to break out of this structure here, taking this liquidity, I would expect a push back down, retesting obviously possibly the 50% of that, then the entry, then hopefully that big push down for this 1 to 3.39. Again, we'll wait and see what happens with a liquidity grab on here. We'll just see if this is going to get, see if this gets taken. Again, price inefficiency on here. We've had the breakout as such from that pullback there. It's starting to mitigate price within that. 50% on that. Obviously, it resides about there. We may get the, like I say, we may get the bounce off here and then push up. But pause the video. We'll be back in a moment. I hope I'm not giving you too much sort of in-depth analysis with this, but again, once you start training your eye and marking your charts visually like this inside of your goalposts, it's always good. Maybe if you take, let's say, if you don't like trading a Friday, for instance, because obviously the market's coming to close, pick a Friday, pick a 2-hour section, okay? Look for a swing point like this, and then start identifying structure, start identifying areas within a singularity swing like this, and see how it plays in there. Mark your imbalance areas out in that. Do it on the 1 minute chart, because guys, when you start doing this, and that might not have any relevance whatsoever with entering a trade or getting a bias on understanding on where price is going to go. But if you do this, pick a swing point, and it doesn't matter where price is heading, and you've got a swing point, okay, and then it starts on the pullback. Start identifying within that pullback where the imbalance areas are, where your order block is up on the high side or the lower side. See where liquidity is, and then run the play-by-play and mark these areas out, and just watch how beautifully these will come in and respect these areas. And I can guarantee you, over time, once you do this and repetitively do it, you will start seeing these on the chart. As soon as you open things up, you'll be able to go bang. I can see the imbalance, bang. I can see the mitigation of the order block, bang. I can see where the footprint is being left behind, bang. I can see where the price inefficiency is. I can see where price efficiency is as well, because there's nothing being left as a footprint from that swing point. I hope that does make sense. So I'm just going to pause the video. We'll be back in a second. Hopefully we'll get this up into an entry very soon. Just one other thing that's possibly come to my mind as well as we scroll out of the bigger picture, okay? As we are continuing down on this trend, we have to remember, okay, that we have this area here, okay? So as this big area comes in, that's the swing, okay? We may not get, obviously, the entry here. If this does just shoot down, all it's done is created a new lower high, if that makes sense. Because overall, in essence, what's happening on this, what's happening with this, as it does a continuation of trend coming down, it just means that this lower, and then the lower here has done a pullback to create, obviously, a new lower high. So this area on this pullback may just be a lower high. Again, 50% is generally a pullback area, okay? Just ignore those extensions at the moment. So if I go into IP here, so generally 50% is where we'll get the mitigation. We've sort of come in with pullback and we went even above that. Again, there might be every chance where we don't get the bargain basement buy or sell, if that makes sense. Because as we get the pullback, the further the retracement into the initial impulse, the further the retracement into those areas, that you get more discounted price on what your initial entry is going to be. So again, if our entry was here, we are paying a bit more of a premium price. But again, if you paid for an entry here and the price kept going into this areas, okay, you've been into what you would then call your drawdown, and then you did not get your most optimum price. This is what we are anticipating. With the order block, the 1 minute scalp, we are trying to get the very, very best ultimate Black Friday optimum price. That's the best way of putting this. You are not always going to get that, but this is why when you have your order block formation there, we try to cushion the entry on here by pulling the pippage a little bit more, and then obviously you have your pippage a little bit more above the back end of the order block, simply to allow for your pippage on the move. Okay, so I hope that bit makes a little bit of sense. Again, I'm just going to move the ones. Let's go back into price, just so we can see what's going to happen. See, we get the mitigation coming up to the high side. Again, we've got the 50%. It's holding liquidity as I thought it was going to. It's starting to head towards that again. We want a break. If we get the break again, if that break of that comes, okay, and what I mean by that, if the break comes on this, okay, it'll just grab the liquidity here, and then it may pull back down into one of these order blocks here, one of these red ones here, before then pushing up to the entry. That's what I want to see, because if we get that liquidity grab here, it just makes it more stronger that the price may actually continue up to hit our entry before pulling back from that lower high, if that makes sense, before going down to take the liquidity on this lower side. And unfortunately, what it's looking like is it's going to start taking out these lower lows, and we've got an area there where there's liquidity resides as well. So I'm just going to put liquidity there. If we touch this or come out of this, it certainly may be a reversal. I may start then looking at doing a different bias on an entry, because we are coming out of here. I'll possibly sort of bring my entry down a little bit more. This is where, guys, you need to start understanding price action. You can start looking at how price is moving, and we'll just see what happens and just see if I need to change my bias. Right, so we've touched liquidity there. We've pushed out. Let's take a look. 44 seconds. Right, so if I just look at a short on here, liquidity there. So 1 to 2.2. Right, so if I start to clean up a bit, okay, and you're always moving. Let's get rid of this. Obviously, there's imbalance still up there. There's liquidity still resides on there. We've got a 1 to 2.2. Make it a bit higher. 194. Get rid of this. Now had our breakers. So now I'm shifting my bias based upon this swing has now come in, and it's given us what possibly would have been its true potential on the pullback to that lower high. Okay, let's get rid of that. See if we can get the move back into this. It's going to close out my. Oh, can I do this to here? Close out my trade on my live account. Again, we've still got imbalance up here. We've got the imbalance mitigated here, so we'll just get rid of that. This is still the range. This is the initial push. This is the pullback. Now we could be seeing what we call, obviously, the A, B, and then C down to here. Generally, what happens is I've done on my earlier videos, your A, your 0 to A after the pullback would generally be that there, which would then give us possible TP, a possible TP of that, okay, which would then be a 1 to 8, okay. But again, I'm not anticipating that. I'm just showing you where price can go to, sort of thing. Let's just get rid of that as well. Get rid of that. See if we can get the entry on this. 2.18. bold move, this. It's a very bold move. Let's have a look at the liquidity there. So again, what we are expecting is that on the higher side. That on the higher side, the certainly hold structure. We've got a cushion just above this lower high, if that makes sense. We might push to get entry. It's a 1 to 2.18. What I'll do is I'll pause the video. It's more or less coming to the halftime of my session. Got to go make that halftime cup of tea. We'll be back in a second. Let's just see if the shift in the plan on what my bias was the right thing to do. Again, it's a bold move, because basically what could happen, we could still get that push up, break that liquidity, and still hunt for the imbalance and the order block. I'm hoping this is the right move. We've got our entry touch to the pip. Let's just see. We'll start getting the reversal. I was going to go make a cup of tea. We'll just see what happens. See if we can get this to sort of come down. It might just push straight through and head for that imbalance on the upside. If it does stop us out on the above, it's certainly going to go for this here. Okay, I'm going to pause the video because I'm going to go and make me halftime cup of tea, guys. I'll be back in a moment. Hi guys, got my halftime cup of tea. Unfortunately, this has actually came to stop us out on here. So you win some, you lose some. I don't hide behind anything. Let's reactivate the initial. Let's reactivate the initial order block. I'm going to make this a little bit different though. I'm going to pull this down to possibly one there, 365. Obviously that's a -1. Again, I'm not too worried. We live and learn, nothing to hide behind. We've got the imbalance to be hunted on here. Can I get that to a 1 to 3? Yeah, that's a 1 to 3. Trying to see if I can get this on my live account as well. Get that there. So I've got a trade ready to be opened on my live account. Let's see, we've got to push for the entry. It's wicked into the imbalance. See how it's beautifully wicked into that imbalance. Maybe we should have trusted the first directional bias, to be fair. But again, to the eye, bang, bang, bang. We could be heading for what we call a harmonic pattern. Again, it depends on where this wants to stretch. As we've got here, there's only so far that it'll allow it to go. You possibly got to this area here. Water block up on the top. For every possibility. Possibly think to there. Trying to call out there now. Just this is for me again. Like I say, this is not about being perfect. This is about understanding price movement, price structure, how it moves, why it goes to these points of interest. And again, I don't hide behind anything. I learn more out of doing this and sort of keep myself accountable and showing you what I do. It's all about being open and honest with things. And if I can show you something and you have a little bit of a light bulb moment from me doing this, then hey, everyone's a winner, you know. So again, we're coming into the imbalance area. This was marked previously. That's sort of respecting really well. So when it comes to things like marking the imbalance and things and that down, like I say, practices, do this on a Friday. Get yourself a swing point, then mark up these areas of interest within that swing point and see how they react from there and see where you go, you see. So what we'll do, we'll pause the video and see, we'll get a reaction into our entry, okay? Possibly going to go into the bit of drawdown I would have thought on this if we do get the head up. However, we've mitigated right the way through most of the price action through here. But now as we create a new swing point, okay, as you've got another lower high, okay, we haven't come back to create a lower low. We broke the structure of here. So again, price efficiency from this swing at the moment, you've got, look at this, the size of that imbalance there. So you've got buying power, buying power, buying power until this candle comes down, flat bottom, wick, come back. Let's get it right, John. You've got him. Oh, God. I don't know. Let's get this right. Wick to wick. That's your imbalance there. It's a big chunk of our workable area, to be fair. From there, again, wick, very minimal, and that's about it. They're the two imbalance areas that we have to contend with at the moment. Let's see if we get our entry to this at the moment. It's a risk or reward of 1 to 3. Let's see, we'll get that touched in and then we'll take it from there. I'm just going to pause the video, guys. Hi guys, and now we are back again. You can see we've got a pip entry risk. I've extended the reward a bit more to 319. However, we've got the pip entry there. Got my cup of tea. Hopefully, we're going to get this pushed down. I'm hoping this is going to hold structure. We've got a harmonic pattern forming, so we may go into a little bit of drawdown. We could have anticipated an area up to here, but I didn't want to go too far into that. However, it just depends on how price is going to react. I've only put this here just for my general purpose, just to see if that would get sort of mitigated. You'll find generally it's going into more or less half of the order block area, if that makes sense. And the harmonic pattern is a W here. So it'll be interesting to see whether price does actually come up to here to attain that sort of mitigation from a harmonic standpoint. But again, I'm learning as I go along. It's now 9:45. I'm in on this trade on a live trade myself as well. I've got partial areas as well, to be fair. So this structure here is where I would possibly, in all fairness, on my live account, I would possibly be on here, take 50% and move to break even, if that makes sense. So again, take half of the profit and then move the stop loss to break even. That's what I'm doing on my live account. But for documentation purposes, this is a one-way show. So what I mean by that is, this is, I want an entry, I want to take profit, I want a stop loss. I will only, let's just take a look, that's a 1 to 3. So I may stop that out once it gets to there, to be fair. If this reaches to here, I may stop it out, because then it means we have getting a little bit back from the -1 this morning, plus we've got a little bit back from we didn't take a trade yesterday, did we? No, we didn't. It was 2 days ago we took a trade. So I think what I'll do, in fairness, I'll take the structure to here. I'll take the 1 to 3, to be fair. This is all about being consistent. This is all about being consistent and being profitable, to be honest. Let's take a look. And in fact, let's move our stop. I'm going to move the stop to just above where I'm anticipating that to come in. So this is a 2.33 trade, to be honest. Okay, so we've moved our stop loss just above where I was going to anticipate price to go to. I brought price into the middle part of where the harmonic pattern was going to start to form, which is the previous lower high. If this comes to stop out, we've just moved our parameters a bit. We've got a 2.33 gain, so that's going to give us into profit. Let's just see if price will hold structure. Again, it might go up and stop us out. It's all part and parcel of trading, to be fair. So that's where we are at the moment. We've moved the parameters. We've moved the stop loss in a little bit. The entry was already always there. Instead of going for that 3 push down to the bottom, with reducing the stop loss in, even though we're on entry, it's refining it, but it's also a little bit riskier. But it allows us to draw in the TP area to a structure point, if that makes sense. So as we've come up here, we've got a lower high. We've now got on here that there would be a higher high as such. Okay, that would be a higher high area. That area there is also a higher low at the moment, because we're stretching out of this. And again, liquidity that was residing on the bottom that I was anticipating and edging towards is a higher low as well. So we'll see what happens. This is a bit more, this is a risky move, simply because we were looking at widening things up with regard to structure on the lower high on this top end. But I'm just going to see if I can get in and out for a scalp, because this is what we do. We identify structure, we identify price movement, we look at structure points that have been forming, and there's a reason why I'm very visual with this, because I'm identifying where the previous swing points have been. It's not always about the bigger picture. We are working within a range. Within that range is that swing point. Within that swing point, you've got many other different factors, from liquidities, breaker structures, holding points with regards to these swing areas within a more widened swing area. So again, this whole structure, which I'm hoping it will do, we may get a 2.33 trade out of this today, to be fair. I've just closed out me live trade on there, taking about 15-20 quid off that, so I'm happy with that. Again, I'm holding this as it is for where it's at, because we've got a very, very fine line here with regard to this swing point. Okay, so this is a very, very fine line of trading. We'll go from a swing to a swing. You're talking about 3 pips of movement. It can just be bang and it's gone. But we'll just anticipate now we'll move down to that lower side rather than the higher side. Pause the video because I'm going to finish off my cup of tea, and we'll see what happens within the next minute or two. We'll be back in a second. Hi guys, so let's take a look. 2.33. So there's a 2.07. See, I'll be happy with a 2%, to be fair. We'll just get this to close out. 10 seconds left of this candle. Let's see, we'll just get out of the push back down onto it. Or it might go the opposite way. It might revert. There we are. Bang. Right. So that's closed out on that current price on there. Risk to reward of 2.07. I'm happy with that. It's give us some plus D at the moment. We've got to protect the capital and protect the house, the sort of thing. So on that, nice profit. 2.07%. And what we'll do is we'll go over this later on, have an end of session analysis, okay, an end of session analysis, and we'll break this down. So at the moment, we've got a -1 and then a 2.7, so we're on 1.07 for the day. Again, let's just get rid of some of the noise and what we've been anticipating, reset, and see where we're going for our next move, okay? So again, let's just get rid of some of this noise. Enjoying today's session. I hope you guys are as well, and hopefully you are taking notes as well, because the more you take notes, the more you practice, then you're going to identify these areas as well, okay? So again, there's liquidity down on here. I was anticipating this to come right down on here, to be fair. So if that was going to come right down, there's a 1 to 5 point odd there, to be honest. But again, I'm happy. I've stopped the flow of the bleed with regards to that -1. We've got a 2 over a 2%. We've got a 2% win. So we're in profit for the day. I'm happy with that. So let's just take a look at that. From there, identify your areas. Create a structure, okay. This brings the order block into play. You could use that, to be honest. Order block. I don't know why I've got that so dark. Easy fix. Order block. So click on that. That's the order block saved, so we'll save that there. Short position. Again, we've got a 1 to 2, 4 there. And again, our liquidity resides there, okay? So now we're anticipating this move to come back up into this order block, test, and then come down to the liquidity area. So that's the next move, and we'll see if we get this as well, guys, okay? Because at the moment, again, that there, liquidity's been held as well on the top side, if that makes sense, if you can see that. So there's liquidity forming on the top side. So this is a protected high at the moment. I'm just hoping we're going to get a pull in and then a pull back down. We'll pause the video again and we'll be back in a second, see if we can make what we've got is a -1, a 2.07, so we're 1.07. Let's see if we can get this 2% in the bag. And then from there, if we've got them 2 wins, we are then going into what we call the asymmetrical compounding. We can get to turn that dial. Let's see what this trade brings. I will pause the video and we'll be back in a short while. Hi guys, again, back again. We are anticipating an entry at the moment. Actually, the price has just slowed down, to be fair. The price just slowed down, in all honesty, if that makes sense. Again, we have protected the loss that we took this morning from here. I've drilled right down into where we are at the moment with regards to the last couple of swing points. Again, because we set the goalpost at 2 hours, we've had our directional bias. So as I go up and focus right into where I need to be, I know I've got my demand on the bottom. I know I've got my supply on the top. So I'm not remotely interested on what's happening further to the left or right. I've now got the goalpost, got the crossbar, got the goal line. I'm working upon what I've got structure-wise on the previous couple of swing points. We structurally, mark these out, and we go and identify and be visual. Okay, so again, we'll come to the 10:30. We've got 15 minutes for this entry. I'm gonna keep it. If we get towards, say, 20 past, and this hasn't ended, I think I will just close it out, to be fair, because again, I try to keep these sessions to just 2 hours. Again, from this aspect to what I've got on my other screen to the left of me, I've got my Mac, which is what we're recording this on. I've got my laptop to the left. So if I see a price that I like the look of, I'll enter it on there. I entered the previous one that we just took, the 2.07 on my live account. So again, we changed the parameters on that to get that 2.07. So I'm gladly in profit on my live account. But the purpose of these sessions is to document what we find between them 2 hours. We take a loss, we document it. We take a win, we document it. But again, if we get an entry and a TP on two occasions, we then do the asymmetrical compounding, where on the third trade, we can then turn that dial. And at the moment, because we've just started getting into that side of it, going back on the last 4 previous weeks or 5 previous weeks, it'll be 4 previous weeks, we've just been using regular compounding. We've grew the account to just over 40%. So I'm going to do the asymmetrical compounding from here on in towards Christmas. I did a quick short video yesterday just to let you guys know, and that there I was doing the Dow Jones. There's another guy in our group, I know he watches the video, so it's a big shout out to Peter. He's been seeing massive success with that. So I thought I've loved seeing everybody else's success. So I jumped on that myself on the New York session. I did a 1 o'clock till 3 o'clock session. I used asymmetrical compounding and I got 3 entries. I got 2 winners. So the third one was asymmetrical compounding. And after I done that session, I got over 40% growth. 40% growth just by risking that 1% on each trade. I've got like a 1 to 2 or a 1 to 3 point or a 1 to 3 point odd. So then again, the asymmetrical stuff. If you want to know what the asymmetrical compounding is, you just need to go on my further down on my description on my YouTube channel. You'll see the asymmetrical compounding video. It is very, very worthwhile a watch, because by the time you are sort of progressing through what you do with your trading and you're seeing what I'm doing on here, and if Peter's watching this, Peter will actually comment in the video below, in the description below. Once you focus your attention into an allowance of time, and you say, right, that's my pair, that's my 2 hours, that's the parameters I'm setting. When you take away the noise, which again is all of this sort of stuff, you see all these tickets. I used to have alerts set all over, and it used to just ping. I've cut all that crap out now. What I do is I focus myself like this every day, only for 2 hours. When I do that, if I can identify price movement, I've now come accustomed to what Euro USD moves like. So like I said this morning at the beginning of the video, I told you how there was a big spike in a move within the 8 hours. After that 20 odd hours, it moved less in the 21 hours, I think it was, previous to them 8 hours. There was 39 pips of movement in an 8 hour spike from just before yesterday's session. So from the end of yesterday's session right the way through to this morning, around about 21 hours, there was 10 pips less. So there was around about 29 pips. So that just shows you what we done yesterday when we went more analytical. We knew there was something up with the pair. We knew it wasn't going to produce what we thought. We seen there was a big impulse drive just before the start of that session. So we used yesterday's session to be a bit more deep dive, a bit more analytical, and it was the right decision. And this is when you sort of condense everything down, it is worth your while understanding that will happen. And when it does happen, you do not jump on other pairs. You do not look on other charts. You do not chase the price. It's pointless, because overall, you're just going to weaken your chance of consistency. Okay, and that I always work on three things. Them three things are your confidence. Okay, once you get your confidence and you're seeing this sort of stuff work for you, you're then going to start seeing consistency, because you are concentrating everything down into one area. You're not spreading yourself too thin. You're understanding how to mark the charts up and things out. And when you see these levels mitigate, you mark that chart out and you go, like it was bang, and it does it to the pip. Especially on these 1 minute charts, you're like, it boosts, gives you a surge of energy, and you're like, wow, you know. So from there, when you get that confidence and you're seeing it's working, so you start doing that more, your confidence then turns into the consistency, because you've cut out all the noise around you. And then from there, guys, the consistency, after you start getting that consistency from that confidence, you will start seeing the profitability come. Yes, you're still going to get days where you'll have maybe a loss or even two losses. But at the end of the day, you've got your goalposts there. You then look at the trade, see where it went wrong. You can identify what happened. You simply then just say, right, well, that's me for the day. We move on tomorrow on my allotted time. We'll mark the charts up. We'll mark the areas of point of interest. And then we take the next day as it comes. From there, guys, because you were more structured, you were more disciplined, you were more focused, you will get your days where you have a minus day. But at the same time, when them days come in where you've got your confidence, consistency, and your more structured approach, when you get the profitable days, boy, you're going to be so much more profitable than what you will ever be chasing price on this sort of stuff here. Okay, so again, we're heading into 20 past. So at the moment, I think I might call that for the session today, because I'm not going to get too involved with this price at the moment. So what we're going to do, we're going to mark the charts on the Excel sheet. Okay, let's just get the Excel sheet. So as you know, we had a -1 and then a 2.7 win. So the loss was a -1%. Okay, and then we had a 2.07% win. So on our growth, that would make it 1.07%. So what we've got on the trusty calculator on the phone here, we've got 40.85 plus a 1.07. That's taking us to a 41.92, right? Now, when we look at what we've done today, okay, let's just get this marked out for ready for tomorrow. Once we take a look at what we've done today, okay, we can see we've had a win. So now we're ending today's session on that 2 hours with a good vibe. Yes, we took a loss, but we brought it back, and that's a positive to take out of that. We've got a 1% growth. But going into tomorrow, if we get a trade and it's successful, okay, we then have the chance to turn the dial, and I'll use that analogy all the time, turn the dial to use the asymmetrical compound effect, okay? So let's just end the session from here. We'll go on here, and I just want to have a chat as well, to be fair. Let's have a look at the bias as we always do, and what we did on a move down. Again, this morning, I spoke about how this move here, let's just have a chat about this. Let's have a chat. I'm going to show you what I was on about this morning. So what you'll see is from here, the date range. So from that point there up until the opening session there, that was 8 hours, okay? From that high there, which was just after the session, down to the beginning of the session, okay? So we've got 2 areas. And again, this is just going to get a perspective for you, okay? So for 8 hours, for 8 hours, excuse me, for 8 hours, you can see 49 pips, okay? 49 pips for 8 hours. You just drop that 3. So 8 hours or nearly 9 hours, 49 pips. Pippage from that point down to that point, you're looking at 20, nearly 22 hours. It's only an extra 2 pips. So you're going from 8 hours to 21 hours, and there's only 2 extra pips on the 21 hours. So that just shows you when I said we were stuck in an imbalance, like a sort of consolidation phase, we were still stuck within a phase of a phase, if that makes sense, because once we had this breakout here, we come back into the entrapment of this impulse move. So we created just lower lows, lower highs. And then again, it was very indecisive going into that. We created a higher high from inside of this range. We are still technically still stuck inside of that big impulse move at the moment. However, when we go into today's session, we were identifying areas just before the session on this impulse here. This high down to here, that there's produced within 2 hours, okay? Now, again, 8 hours was 39 pips, okay? 8 hours was 39 pips. 21 hours was 51 pips. This here, from this impulse move to this impulse move, 2 and a bit hours, 35 pips. So there was a hell of an impulse move on the downside on this, okay? So from there, when we look at the intermediary price, before we started the session, I spoke about, we looked at the price on here, okay? Break a structure, retest into this order block. There was a 1.4. Again, come out, break a structure, retest into that order block. There was a 2.47. So before we even ended today's session, leading up to that, we missed out on just under 4%, but that's not to worry. From there, we come down to create the lower. We went into the session and we decided to start looking at the pullbacks on here. And once we were in this area here, there was some amazing price action. When I was identifying structure, I was going on the general bias, and I sort of took the trade away from what I first initially put, which was this one here, thinking we were going to get in and out on a quick one. We learned from that mistake. We hit a -1. From there, we went back to the original idea. This was going to be a 1 to 3, a 1 to 5 or so. Obviously, if we'd held that structure, we would have gotten it, okay? As you can see from here, we certainly would have gotten it. It was just under a 1 to 4. I'm just going to click that back to where it was. Instead, we closed out in profit of 2.07. So we protected what we'd lost. So we covered that. And then from there, we were looking at this here going into the field of play. Now, if we drill a bit further into here, we can see liquidity was being held on the high side. I was anticipating a move to touch into here. And again, we've missed out on just a pipette on an entry to a possible 1 to 2.14. Just, I mean, it obviously hasn't come down to hit the liquidity side, but we've just missed out on the entry on here. But this again shows you the power of the bias of what I was predicting, simply because, again, we work from the order block and the breaker structure sort of implementation. And again, it shows you just how much structure is respected. Okay, guys. So stop the share, make this a bit bigger. The takeaway for today, let's just have a quick sipper. So the takeaway for today, guys, is like I said, we work upon the three things, which is your confidence, your consistency, and then forget about the profitability. That comes naturally. Okay, you'd never go chasing to be profitable in trading. What you need to lock down first of all is the understanding of structure and the ability of being able to mark out your charts. Now, for my approach back in the day from 4 years ago, I was always here, there, everywhere. I was like a busy bee. Was it a bad thing? Yes and no. It has its benefits. It has its pros and cons. The pros, you do sort of learn a lot of stuff, but at the same time, you've got to have a strong mindset because you're going to feel a lot of the time, if that makes sense. And you're not going to learn if you don't feel. Okay, and I hope let that sink in for a bit. You're not going to learn if you don't feel, because when you feel, you pick yourself up and you know why something went wrong. You pick yourself up, you move on, because then you know you're not going to do that again. So from there, it does have its pros with that, but you've got to have a strong mindset to be able to pick yourself up and just say, yes, it hasn't worked. Let's move on and let's just understand why. A lot of people get in, and if it doesn't work, it doesn't work, it doesn't work, it doesn't work again. They just give up. And the people that do that is simply the ones that are trying to live trade straight away. They try to live trade straight away. For me, in my first 2.5 years or so, I just demoed, practice, and sort of get the structure. From there, I was part of a platform which they had you all over, to be fair, and using different things. And I left that. So once I left that and opened my eyes to, I was more of a longer term trading person because I was working a full-time job. I was profitable on what I was doing with that. However, again, from what I'm doing now to what I was doing then, again, it's a different skill set in itself. It's a shift in mindset as well, because when I was trying to scalp while I was full-time worker, I was trying to get in and out while I was trying to do with these longer term trades, and it messed me up a little bit. And again, it's a learning process. From there, I was able to do what I do online and sort of build upon what I do. I've been able to sort of now be able to do this full time from home. I enjoy it. And from my own ability, I like to sort of help people understand structure and price action sort of thing. So it's why I built this sort of stuff here. And it's also why I put stuff on YouTube. If people see value in what I do on a day-to-day basis, there's so much more that you get from this in Discord. And it's not just from me, it's from hundreds of other like-minded people. So from there, like I say, come across the scalping technique and having a big knowledge. You can always still widen your knowledge, but having a big knowledge of the way price moves and price action and identifying POIs, which is really important, and being able to structure a smart money sort of aspect into a scalping. I thought, let's take the attention away from the wider picture, stop the alerts, what people do, where they go chart to chart, set them goalposts for 2 hours. And again, I said this earlier on in the video, it's on a Friday. If it's a Monday you don't like trading, or if it's a Friday you don't like trading, pick one of those days where you set your goalposts, okay? Set your goalposts. Choose a swing point. Choose your swing point. mark up the areas of your imbalance. Okay, mark up your areas of the swings with regards to your lower lows, lower highs, high highs, lower highs, and have your order blocks in there. See how price comes in and mitigates onto these. Do it on the 1 minute chart. And like I say, don't have it as a full picture. Do just a solitary good swing point of impulse drive and focus your chart into that swing point only. Draw out your footprints. Draw out your footprints of price inefficiency and just watch how price goes back to those areas like a magnet. Okay. So again, I love doing these. I hope you're taking quite a bit of value out of what I do. I love what I do on a day-to-day basis. And if you want to know more, simply subscribe. Obviously, you'll get used to the videos that I have on here. But also hit the notification bell, give it a thumbs up, drop a comment or two if you can do. Please just let me know if it is valuable, what you're seeing on a day-to-day basis. And then from there, if you want to take that step further and get access into this, just simply hit that join button there. For the price of a cup of tea and supporting the channel and what I do, you're going to get so much more out of this stuff. Okay. So my name's been John, Mr. Forex Fighter. I hope you have had a fantastic start of the week and keep crushing it, guys. Keep trading, and keep a strong mindset. See you later.